Hola, bonjour, namaskar. I'll welcome you all in this video series on IFRS 8 operating segments. This video series will help you to build a solid understanding on the segment reporting, and basically we can understand what's the benefit of segment reports. I hope you will enjoy this video series. Let's move on to the index part. Index part. Index part specifies what are the items that we're going to discuss. So in this video, we will be discussing on three major aspects of segment reporting. The first one is the core principle of IFRS 8, operating segments, why segment reporting is important. The third point, the management approach, a brief understanding. So I will guide you through all these areas in a very lucid and very detailed explanation. The first thing we will discuss is what's the objective of the IFRS 8, why we have IFRS 8 in place. For the second point, we will go through why segment reporting is very essential. I will talk you from the point of view of an analyst. How the analyst sees the report. Suppose I'm an analyst and I want to analyze a company. How segment reporting help me to get a good grip over the analysis of the company and how can I interpret those results and those output of the segment report in my entire valuations. The third point we would be discussing the management approach. What's actually management approach is and how it is different from IAS 14. IAS 14, let me tell you, is the erstwhile standard which is being superseded by IFRS 8. So before jumping into the IFRS requirement, I want you guys to go through these three major areas to build a very solid foundation on IFRS 8. I hope you guys will have a happy learning throughout the course. Thank you. As I said, IFRS 8 has two core principles. The first one is the nature and financial effect of business operations. The second core principle is the economic condition in which the entity is operating. Now, I would like to guide you on this part. This core principle, the entire IFRS 8 is all the disclosure requirement under the IFRS 8 is based on the criteria that it should satisfy or it should enable the entity to meet these two disclosure requirements or these two purposes. So in a nutshell, these are the two purposes for which we are currently reading a developed IFRS 8. So the first one is the nature and financial effect and economic conditions in which the entity is operating. Let's go through an example. To have a concrete understanding on IFRS 8 principles and the concept, let's focus on company number one. Figure number one. Figure number one, we can say that basically it's an Indian company, INR, crore. So you would be able to see FMCG, fast moving consumer goods, hotels, agricultural businesses, paperbacks and packagings, and others. So these total look like some area of operations for the entity. So the all if I divide the entire revenue of the entity, it's coming from these four or five major channels. These I can say major product lines or maybe major businesses. So these are the major businesses and which contributes towards the revenue of the entity. So it is basically a disclosure based on the business. I'm not saying it's a business segment. I'm just saying that it's provide disclosure in respect of the businesses in which the entity is operating. Now let's stretch towards figure number two. Figure number two specifies this much amount of revenue is coming from North America, this much amount of revenue is coming from Europe, and this much amount of revenue is coming from India. So it provides an idea about the geographical segments, which means the geographical area from which the entity is deriving its revenue. So I'm not going to discuss in detail why geographical area is very important. But I would like to say one thing. We will discuss this in the next section of this video, why we do segment reporting and why it is important. So stay tuned. You will have a detailed explanation for this, my promise. Now, let's discuss about the second section, why segment reporting is important. Rather giving you a text, I would like you to go through the two examples that I have put in this particular slide. This is basically a segment report of one major company called Nike. It's Nike. So, which I've downloaded from Google. Both the sheets, both the images, I've downloaded it from Google. So, suppose, suppose figure number one is business segment. It's a disclosure in respect of business segment. I'm not saying it's a business segment. I'm just saying, suppose it's a business segment disclosure. Now, I have a question for you guys. Think from an analyst perspective. Think you are a financial analyst and you are calculating or making some calculations so as to assume or so as to understand what is the intrinsic value of a particular stock of the particular company. Particular company is, in our case, it's Nike. So I'm making a fundamental analysis in technical terms, and I'm calculating the revenue or the business, how well the business is doing for Nike. So what would be in your mind? Let's I'll give you 5 seconds to think about it, and just keep it with yourself, and let's check whether your understanding and my understanding are same or not. Your time starts now. Time up. Now, first it will help the analyst to understand how the business is doing in each of the major product lines. Think about this example. Footwear, I'm sorry, footwear, it's coming out to be 58% of the total revenue. It's apparel, it's coming out to be 31%, and all those small product categories. I won't go in detail on how equity research would be done on this data, but I can give you a basic understanding of what we do. It's like what we generally calculate the total sales of a particular industry, and we calculate the market share of the company. Suppose the total sales is $100 million dollars, and the market share of the company is 45%, then the entity's sales within the next year would be $45 million dollars. So this is majorly coming from this segment. This area means what's the business, how these business is doing, which would be able to indirectly give me a clue like what would be the next year's target market share of the company, how they are going to perform. So this can give me a fair idea on calculating the market share and calculating the revenue for the entity. And if I get the revenue, I can easily calculate, not easily, I can calculate, or based on number of assumptions, I can easily coming out to be a figure of like $10 per share or $20 per share based on FCFF and FCFE modeling. So I'm not going to go in detail, but this is the way through which generally top-down approach is followed. And segment reporting plays a really important role in understanding how the business is doing and what's the market share of and how much of the revenue is coming out from a particular portfolio and how these are being managed as compared to the prior period. And so that trend analysis is also a good area that we can look into, but for now just understand this thing. Figure number 2 specified about the geographical segment. If you see, from North America, 44.65% of the revenue is coming up. And from Japan, it's 2.8%. From Greater China, it's 12%. From emerging markets like India, I love my India, it's 11.46%. Why geographical segment is important? Geographical segment will help the analyst to understand the economic risk. Which are the economies to which the entity is exposed to? And one specific area I would like to understand, I would like to explain you guys, it's called country risk premium. I don't know how many of you have understood what we call it that country risk premium, but now the world is like not the country risk premium is not same. So even if I'm using a standard deviation, and think about a company, suppose I'm investing in a country like Iraq or even Syria. I have huge sympathy for Syria, but I'm sorry. Suppose I'm investing in Syria, a company incorporated in Syria versus a company which is incorporated in United Kingdom or in Canada or in US. My risk premium will be very, very high in investing in these companies rather than these companies, because we have an understanding that these companies in these areas are prone to war and may lead to even dissolution or liquidation of a company if a war strikes out, and which will have a very substantial impact on the sales of the entity. So these two areas are very, very crucial part. This will help me to calculate the total revenue and understanding total profit, total and FCFF and FCFE calculations. It's very crucial. And this will help me to understand as an analyst to calculate the country risk premium to understand the economic risks to which the entity is exposed to. Now, the third point that I promised that I will discuss in this lecture is this management approach. The management approach is a very significant change as compared to the IAS 14. IAS 14 was the old segment reporting standard. So, what do you mean by management approach? Management approach, as per IFRS 8, means the entities will report segments that correspond to the internal management's report. Dicey. I'll make it clear. The primary purpose is to allow the users of the financial statement to review an entity's operations from the same perspective as of the management. I'll give you a very small example. Think about these people. These people are the management, and this is our company. Sorry about my drawing skills. And we have this shareholders or stakeholders. So they take the decisions of the businesses based on certain data, certain figures. And it's very crucial for these people to understand which are the data that these people are looking into to make the economic decisions of the company. Because this data may differ from the data which is provided in the financial statements. And due to which there may be differences between the data which is used by the management for the purpose of decision making and the data being reported in the financial statement versus between the reported in the financial statement. That's why IFRS 8 has something called management approach. You need to provide those figures. The measurement is based on the figures that is provided to the CODM. CODM means Chief Operating Decision Maker. So in our example, this is the management who take major decisions. So the entire segment reporting will be based on the figures that are provided to them. And we will add a reconciliation, that is a separate thing, and which is provided to them for the purpose of decision making. So these people, the shareholders, would be able to know which are the figure from which the decisions have been made. So this is the end of session 1 on segment reporting. I will see you guys in segment 2, where we're going to discuss on the scope of the IFRS 8, to which entity as IFRS 8 is applicable, and further on. I wish you a very happy journey towards this course on segment reporting. See you.